Welcome back, investors, to Ticker Time News. I'm Adam, and this is the After Hours Show. We're here for another market close live stream to talk about the markets today, to talk about inflation, because I know that's on everyone's mind with the CPI data coming out tomorrow morning before the markets open. That's 8:30 Eastern when the CPI data is released to everyone in the public, and we'll have to see whether inflation is going up, whether it's inflecting to go flatten out, or maybe inflation is going down. I did a Twitter poll earlier today, and 80% of respondents said that they believe inflation is going up. Now, I find it hard not to believe that. I myself think that inflation is not going to go down as quickly as some think it is. I mean, the evidence is all around us. Look at all the prices in the grocery store. Everything is going up. One study I read said prices for groceries is up 30% from where it was a year ago. So you go to the grocery store, you fill up half your cart, but your bill looks like your cart was overflowing with items from the grocery store. So we've got that, and we've got oil taking off over $80 a barrel again today. So there's a lot of concern in the market, and it's why the markets are kind of playing this seesaw back and forth between a little green, a little red. It's not sure what to do at this moment in time because the whole world is waiting for the CPI data to come out to see whether inflation in September, and remember, the CPI data on inflation, it's about last month. So what we're seeing today will not be reflected in that report. What we're seeing in the report is what happened last month, or not September. My apologies for that. Getting a little confused. As I said in every live stream we've done so far, and this will be, I think, our 7th live stream, looking at the calendar there. I always start these live streams out. You can probably tell I'm a bit nervous when I'm doing them. But as we get into it, the nerves kind of go away. I forget about the nerves. I forget that I'm even live sometimes, and I'm just talking and sharing knowledge and value, hopefully something that can help you. Now, I do have the chat opened, and remember, the main thing about this show, for me anyways, is to help you. So if you have a question about a company, leave the ticker symbol and your question in the comments, and we will go over it here live during the show. And if you are watching the replay of this show, then make sure to also leave your ticker symbol and question in the comments, and we'll go over it during the next live stream, or maybe I'll create a video about it. I had someone leave a question about SoFi and ChargePoint. My last video I did that was published yesterday was about SoFi, and the video I'm working on to produce next is about ChargePoint. So leave your ticker symbols and we'll go over it. So let's get started with what I saw in the market today. So all three main indexes traded in the red this afternoon, as, like I said, investors remain concerned over slowing growth, potentially, and most importantly, rising inflation, as energy costs continue to soar. The IMF actually revised lower its global growth forecast for 2021, with the U.S. economy seen expanding 6%, and that was revised down from 7% in July. On the data front, U.S. consumers' expectations hit fresh record levels in September, while the number of job openings dropped to 10.4 million in August from an all-time high of over 11 million in July, and well below market expectations of 10.9 million. In the first month of decline in the level of the opening since December 2020, with the largest decreases reported for health care, social assistance, and accommodation and food services. So restaurants just keep getting hit left and right. while job openings increased in the federal government. I can't help but laugh at that. I know the jobs data numbers are nothing to laugh about, but when you see that all these other industries are decreasing in the amount of jobs being filled, and yet the U.S. government is still expanding. I'm a big believer in liberty and freedom and limited government. There definitely is a place in our world for government, but I believe government should be as minimal as possible in our everyday lives. So back to the market, traders also await earnings season, which also kick off tomorrow with the CPI data. Meanwhile, the FOMC meetings and CPI data will be due out tomorrow with inflation in the spotlight. I believe inflation has been in the spotlight all week, but it will shine brightest tomorrow. While inflation could continue to rise, it could also flatten out, or it could start to reflect and turn down. Again, in that Twitter poll that I did earlier today, 20% said inflation will be higher than expected, while 20% said inflation will be lower. But nobody responded saying that inflation would be flat from a month ago. So I felt that was very interesting. You know, I believe I've already said it, but I do believe inflation will come in hotter than expected. There's simply too much evidence to suggest inflation is not going up. So there was also a report out for year-ahead inflation expectations in the U.S., and it rose to 5.3% in September, the 11th consecutive monthly increase and a new series high since the inception of the survey in 2013. Not year ahead, but 3-year ahead inflation expectations also increased to 4.2%, and that was up from 4%. And that was the third consecutive monthly increase and also a new record high. Jim Cramer says yesterday on his television show that he believes stock market investors should not overreact about stagflation, just saying or suggesting Wall Street's growing worries may be overblown. He also said to, quote, give it time and do not panic. And he also said, one more quote, it might surprise you how quickly things get better. So what is stagflation? We hear that term quite a lot with pundits on TV and YouTube and so forth. But stagflation is when you have slow economic growth and relatively high unemployment or economic stagnation. And at the same time, costs are rising all around you, which is inflation. So stagflation can be defined by a period of inflation combined with a decline in GDP or gross domestic product. It's not good for the economy, and we'll talk about inflation more in just a moment. On the odd idea for many, and this is something that came across the wire today. I didn't realize this, and maybe some of you did already know this, but Best Buy, they're making a pretty good buy, and what I would think would be a odd combination for Best Buy, but I think it's a good buy that they shared today. It's plans to acquire Current Health. That's right, a healthcare company. Although financial conditions were not disclosed about the deal, whatever the price tag is, Best Buy reassured investors that it would finance the acquisition with cash and that it would not affect the company's $2.5 billion repurchase program. During Best Buy's most recent Q2 earnings call in late August, CEO Corey Sue Berry, I believe her name was, I think I have that right, Barry, laid out the three main aspects of the company's healthcare strategy. I know, again, Best Buy and healthcare, it doesn't seem like it should be two that, go together. But the three tenets of their healthcare strategy. Number one is monitoring chronic conditions and commercializing that. Two is selling consumer healthcare devices. And three is virtual care. Now, Best Buy is diving into this third aspect of its healthcare strategy by purchasing Current Health, which provides clinical care for at-home patients through the use of real-time monitors and self-reported data. I know this sounds crazy to think Best Buy, the retail box store for TVs and computers, is diving into healthcare. I just can't get over it. It's so interesting to see this combination. But I think it's a smart move. The pandemic caused a seismic shift in virtual healthcare, leading Best Buy's timing on moving into the space to work out quite well. Teladoc Health, ticker symbol TDOC, which offers virtual care, grew revenue by over 100% for 4 consecutive quarters after seeing just 20 to 40% growth in 2019, showing just how many patients were forced basically into their doctor visits virtually during the pandemic. But they ended up liking those virtual visits, causing clinics to continue offering this service. I know with my own doctor, I cannot remember the last time I was actually in the doctor's office. Everything is done, like a Zoom call type of thing, but on a specialty type app for the doctor's office to use. It's very convenient as a patient, not having to, get myself there to the doctor's office. I would imagine it's more convenient for the doctor as well. Although, there are some things that are questionable about what a doctor can actually diagnose from just seeing on a computer screen, basically, what is happening. But, I guess a lot of their diagnoses anyways are they listen to what your complaints are, and then you go get some scans or some blood work done. So I guess it can work out pretty well. And consumers seem to like this shift. I know I do, as a consumer who frequently has doctor's appointments. Now, on to another company, Airbnb. So Cohen upgraded Airbnb, which their ticker symbol is ABNB, to outperform from market perform, with a price target of $220, up from $160. Airbnb pioneered hotel to homes that shift, with a $47 billion made in alternative gross bookings value in 2021. The firm estimates that it has a greater than 50% market share, and that market share is growing. If you think about wanting to rent a home, a couch even, or some fantastic place, far off, Airbnb, who's their competitor? It's really tough to think of one. I think most consumers, if they're looking for an alternative place to stay outside of the hotel, they turn to Airbnb and they end up using their service. And a lot of the, I believe they call them hosts, for the people who are renting out their homes or living rooms or apartments or what have you, they go above and beyond sometimes of what a hotel would do. So you may be trading off one feature or two from using a hotel versus using Airbnb, but it's definitely working out for them. Another company, we talked about them yesterday, but Square also got an upgrade today from Atlantic Equities to overweight from neutral with a $300 price target. That's a pretty good move for Square to reach that $300 level. The firm believes that the company's growth prospects remain substantial as it continues disrupting consumer and business banking through strong execution against a digital-first strategy. The firm notes that Square's Cash App is a leading brand with network effect, innovates quickly, and has multiple monetization levers ahead. Further, the firm says the Afterpay acquisition adds incremental growth opportunities for Square in the buy now, pay later, and the e-commerce sector. The firm also recommends taking advantage of the recent pullback in the stock. And if you remember yesterday, we also talked about SoFi and how coverage was initiated for SoFi with a buy rating and a price target of $25. So SoFi has been climbing. They were up big yesterday, over 13%. I believe they had a pretty good day today as well. And if you haven't seen our video on SoFi, I would recommend that you go check that out after watching this video. There's a lot of cool information in there, some information that you may not have heard of yet. So I would definitely encourage you to check that out after this live stream. Now, back to inflation. The U.S. economy is facing a threat of higher energy prices at the moment. Notably, the energy prices, or if energy prices continue to scale northward, it could easily push up the prices of essential commodities in the near future and damper consumer spending, which consumer spending has been at pretty reasonable levels. And as prices go up, consumers are going to start closing off their pocketbooks and start spending less, which just hurts the economy all over. So inflation will lead to fewer consumers purchasing. It's that simple. And eventually slow down economic growth. We talked about the GDP, and it's just going to affect that. The higher the prices are, the less people are going to spend on goods and services. I mean, we're starting to see that. But Cathie Wood does have an interesting argument against inflation, and that's the story that I want to cover a little later on in the show. So talking about higher energy prices, coal price is now at a record high, while heating and oil has surged 68% so far this year. The price of natural gas, well, it's almost doubled in the last 6 months to hit a 7-year high. Coming back around to inflation again, it's worth pointing out that the Fed's preferred gauge of inflation has actually jumped the most in the last 3 decades on a yearly basis, raising concerns that prices of essential goods will continue to increase in the near term. It's hard to invest in growth stocks as inflation may easily impact their future cash flows. And I just want to talk about growth stocks here for a moment. I know all of us watching, myself included, we like our growth companies. We like our SoFis. We like there's so many of them to go through the list, but we love our growth companies. And when there's inflation, it doesn't mean that growth companies are doomed to fail. All inflation means for growth companies is that their future earnings will be smaller, because what inflation does is it raises their input costs, it raises the price for the consumer spends less, so now the growth company can't grow as fast. So inflation, it slows the growth companies down, not to a halt, but it limits how fast they can grow. But again, if we listen to Cathie Wood, she doesn't think there's going to be a big problem with growth companies. And again, we're going to talk about her in just a moment. But I think it is interesting that what Cathie Wood is saying about inflation and growth companies. But again, if you are or have a conviction and you really believe in the growth story for one of the growth stocks, for me, it's SoFi. I believe in SoFi. I think the company is going to do excellent. Then maybe you just limit your risk by maybe putting a stop loss order, I should say, on the stock. If it drops to a certain level, then you sell out. You wait, you buy back in, you take your smaller profit and you buy back in with more shares. So it's something that you can do for maybe a defensive measure for your companies that you believe in that are in the growth sector. Like I said, I strongly believe in SoFi and their growth story and where they're going. But they are dealing in the consumer financials and finances, like, banks and lending companies. They can do all right in an inflationary environment. But are we going full hyperinflation? I'm not sure, but we'll get into that Cathie Wood article in just a moment. Now, there are other stocks that do benefit from a rise in inflation, which at the present time should be enough to entice us investors into going with them. Maybe starting small positions to see how they work out. For example, real estate tends to gain from an increase in inflation. Now, I know the housing market is starting to contract. It's been on fire recently, and this old adage may not stick as well. But there are other options when it comes to real estate. You can invest in a real estate investment trust or a REIT. Now, the type of REIT that I'm talking about is one that deals with land. So you can invest in land. Farming land, for example, will only get more valuable. And there's one REIT that I like a whole lot in the farming space, and the ticker symbol is LAND, LAND. Go check that ticker symbol out. If you want to invest in a REIT, they do a fabulous job. They're in the farming sector, so they purchase a lot of farmland, a lot of independent farms. They co-op farms to work together. It's a very interesting REIT, and I think land, not just housing, just land, could do really good in our current environment. Also, look at companies in the consumer staples. They benefit from increased inflation. Ticker symbols like YUM, YUM. Who doesn't like tacos, chicken, or pizza? And you got PepsiCo, ticker symbol PEP. Who doesn't like soda? And you got Target, ticker symbol TGT. Now, this is because these companies have pricing power, meaning they can increase the price of their commodities with inflation. At the same time, gold doesn't tend to lose its shine among rising inflation. And one of the best ways to invest in gold, the best way, is to actually buy physical gold, something that you can hold in your hand. But there is another way, and that's through gold mining. And one of my all-time favorite gold mining stocks, the company is called GoldMining, and the ticker symbol is GLDG. So check out those ticker symbols and see what you think of those companies. Are there any companies that you like for times of inflation? Let me know in the comments below, and we'll talk about it and we'll go over it. Just want to read the comment here real quick. Yeah, we're going to talk about ARK Invest and what Cathie Wood had to say. A little worried about inflation, but it looks like a good technical position. Yes. Actually, here is an article that I wanted to go over about Cathie Wood. It's titled Cathie Wood says exodus from high-cost cities will push down inflation as ARK heads to St. Petersburg. So Cathie Wood's moving her office to Florida, but this from her was very interesting. So the key points here: Cathie Wood's moving to Florida. I said that. Disruptive innovation investor said that individuals and companies flocking to more affordable areas of the country should keep inflation at bay. That's very interesting. Because of the way we are spreading out, leaving cities and going to suburbs, that's going to help lower inflation. That's very interesting for what she's saying there. She also says, we believe that St. Pete wants to become the next Austin, St. Petersburg, Florida, the next Austin, and that's Austin, Texas, and attract tech companies, attract innovation, Wood said during an ARK Invest webinar on Wednesday last week. So let's see, closely followed, excuse me, innovation investor Cathie Wood said the migration trend playing out in her own company is further evidence that investors should fear deflation instead of inflation. Her argument for deflation is so interesting. I almost can't help but believe what she's saying, because she's built up a reputation and has such an amazing track record. Even though her ETFs haven't performed that well this year, her ETFs are at an attractive entry point right now. And we'll look at ARK-K real quick. Let's see. This is the daily view of ARK-K. And you can see since March 5th, she's been trading sideways. And if we look at the stock, it had a beautiful run up last year. I mean, anybody, even noobs to the stock market last year, made money. It was really simple. All you had to do is buy and hold. But the stock, you can see, it has cooled off, or I'm sorry, ETF. It's cooled off. It's moved sideways. It's at $111.74. It was up 1.3% today. I own some ARK-K. I got in around the $100 level. Back here when we were hitting these lows in May, I was doing some tech buying at that point. And her ETF was one of them. But yeah, this is a good price. And if you look, it's going a little bit closer. Again, on a daily chart, you can see there's this support line right here, right around $112 to $111 for support. Anything below this, I think, is a good buy. So right now, I think is a good time to nibble on the stock if there's another downturn, because you could technically, if we drew a trend line from this peak right here on June the 30th, and we drew that straight out to the next peak, I know that's only 2 points that we're connecting, but it is in a downtrend. And if we copy, duplicate, or clone this exact line and line it up on the 2 lowest points down here, they match up perfectly. So it's almost like it's in this downward trend right here. So if this is the case, watch and see if maybe, if it continues this, will it run into trouble here at this resistance line? Maybe this one up here at $114, or maybe it runs into resistance at the 50-day moving average, which is something that happened right here. on the chart. You could almost say it happened here, although it was kind of at the stretched out at the top of the channel. But it definitely didn't allow it to bounce back up from this point, but it also had the 200-day moving average acting as resistance as well. So yeah, maybe watch, put a stock alert of $110. It drops below that, start taking nibbles, and then watch, is the stock going to go up? And then when it comes to the 50-day moving average, what's going to happen? Is it going to break above that, or is that going to be resistance? And then does it continue down to make a third point on this trend line? If it made a third point on this trend line, then we've confirmed that this is in a downtrend, and buying down here would be a lot better, and this is around the $104 mark, is a lot better than buying at $111 or the $114 one up here. So a $10 difference, it may not seem like a lot, but it does add up as you purchase more shares. You could also dollar cost average if the stock is in a downtrend, because her whole technique, I think she does a great job. She's got an awesome and brilliant and excellent team working with her. Let's see what else it says here. Don't really care about the moving to Florida. I want to know the reasons why. All right, here's a quote. The cost of living in St. Petersburg, and that's Florida, is anywhere from 20% to 40% less than in New York City, and that includes the rent. And that's something that Wood said during her webinar on Tuesday. The exodus, or the great migration, is from the very high rent areas of the world to the much lower rents. So there's going to be, let me move this up. So there's going to be a mix effect that many are not talking about or taking into account as they're thinking about inflation. Wood has been vocal about her theory of deflation, while many market participants are concerned about rising prices. The founder of ARK Invest expects deflation amid a breakdown in commodity prices, gridlock on tax policy in Washington, and innovation trends taking off. The hot-handed investor is also trying to put St. Peter. Okay, that's just talking about moving to Florida. Anything else in here? No, I don't see anything else. They're talking about moving and creating a ARK Innovation Center in Florida, in St. Petersburg. The facility will help retain and attract top talent by supporting entrepreneurs, and I'm a big believer in entrepreneurship in tech startups in St. Petersburg and the Tampa Bay region. Last quote from her. I think this region of the world is going country. All right. So she thinks that creating a excuse me, an ARK Innovation Center in the Tampa Bay area, St. Petersburg, Florida, will help kickstart a lot of startups. Interesting. I guess something similar to what they did in Austin, Texas. Okay, so I wonder if there's a wonder if there's something good here about Cathie Wood and deflation. Okay, so this looks interesting. Here, I'll pull it over here. This looks like a good scenario. What if Cathie Wood's deflation really arrives? Is the title here. Let's see. Besides the celebrated money manager, few predict an upcoming era of falling prices, which a new ETF aims to buffer against. Let's see. Cathie Wood, Lonely Apostle, the head of ARK Invest, and avid devotee of disrupting technologies, adamantly believes that deflation lies ahead. This puts her at odds with most of Wall Street, and I would say most of Main Street, because we can actually feel the prices rising. Just go to the grocery store, man. All right. But now, just in case she and a handful of other deflation, there's a new investment vehicle to hedge against down spiraling prices. The same firm that has attracted billions of dollars to its inflation hedging products Quadrationic Capital Management, QCM, is launching a sibling that seeks to create a product against the polar opposite. Okay. The ETF is using options to protect its investors from deflation. Makes an ETF using options to protect investors from deflation. Oh wow. Let's see. Which last happened during the Great Depression. All right. At a time when all investors can talk about is inflation, though, the deflation ETF hasn't torn up the track since its mid-September start of its Friday's close. The ETF has lost 3.6%. The fund's alter ego has risen almost 8%, starting from mid-2019 debut, with investment inflow this year of $2.4 billion. Some investors have expressed concern that the U.S. will experience an environment similar to Japan, given the debt increase and labor market. Yeah, it's kind of scary how similar they are. It's prudent for investors to have tools available to them so they are prepared for a wide range of economic outcomes and environments. Interesting. Let's see, anything else? I thought this was going to talk more about Cathie Wood and not just this ETF. No, let's see. That one didn't talk about it at all. Cathie Wood, the big risk of deflation, not inflation. The founder of ARK Invest laid out potential market winners and losers if her prediction pans out. All right, I'll just read the first part of this here. The big risk ahead over the next 5 years is deflation, not inflation, and it will benefit investments in innovation strategies, according to Cathie Wood. Innovator companies whose share price has tumbled. Okay, that's still talking about her. All right, let's see the quotes. In terms of the recent behavior of value stocks, especially those who believe are in harm's way compared to the severe drawdown of innovation stocks. I like the setup very much. That doesn't tell us much anything. All right, this one doesn't say much at all. Bad deflation. Roughly 50% of the S&P 500 is at risk by this creative destruction, Wood said. Those companies spent the last 20 years catering to short-term investors who wanted their profits, and they wanted them now. Companies that were leveraging up to buy back shares and not investing enough in innovation. These companies did not take seriously the threat innovation posed to their businesses, she said. Okay. The potential commercialization of electric vehicles was seen as being a decade away in 2014 when ARK Invest was launched, Wood recalls. At the time, however, she viewed it as already underway, and it surely is. Goodness, Tesla's been going after it. All right. I'll just close those out. Okay. Does anyone have a question? Do you have a question about a stock that you want to look at? You want to look at another Cathie Wood ETF? We can do that. Well, I'm waiting on any comments from anyone about any companies you would like to look at. I'm just going to look at the stocks that did good today and the ones that did not so well today. So we got lithium up top here, Lithium America. They were up 12.4%. Lithium, that stuff is going to be in short supply with everyone going EV. The stock's at 24.24 right now. Sunworks, HubSpot, TrueLeaf Medic, they were up yesterday. I'm guessing this must have caught attention to the momentum investors out there. It was up 10.2%. That's one of your cannabis stocks. MGM Resorts was up 9.6% today. Sunrun, that's the second solar company I've seen on here. Solar Edge, all right. Plug Power was up 7.7%. All right, that's good. Upstart, they were up 7.1% today. They're at $333. Man, oh man, can you remember when this stock took off on a rocketing run and it was up to like $110? I mean, goodness gracious. Back here, March the 9th, it was a $63 stock. $63 a stock. And then it had this big run up right here where it popped up to 130 something, 140. Remember that big run up? Oh man, I remember that big run up. I got in the bottom, but I sold out about halfway up this thing. Goodness, should have just kept a hold of it. That was just something. How quickly that thing rose. Man. Well, you can never look back and say, I wish I coulda, wish I woulda. You just have to move forward. But yeah, March the 6th, March the 8th, it was at $60, and it's now $333. Okay, yeah, let's plug in. Let's look at Crispr. You know, it almost looks like ARK Invest, ARK K, had the nice run up, even though this run up might have been a little bit further because it ran all the way up here to $220, and it has since pulled back, and it is now trading sideways for the most part. put a trend line. I wonder if we can match anything. So an overall, can do that. Let's just see here for a second what the technical picture is. It really was bouncing off that 50-day moving average right there. That was towards the middle and end of September, keeping it down. All right, let's see if I clone this, bring it down. It doesn't match up perfectly, so I can't get two points on there on that one. Let's see on a more shorter term. What do we have? That don't match up anywhere either. So right now the technical picture here looks like we might have a falling wedge. Could be. Let's look at this a little closer. So we got a slight miss. This is quarterly earnings. Q3 20 slight miss. Q4 20 slight miss. But they are $1.50 EPS negative, and a slight miss, $1.51 negative for earnings. And then we have a beat, and they brought in 944 positive on earnings. Expectations, and their earnings are in 29 days of negative $1.47. And look at this little picture over here. This yellow line right here, this represents their profit margin, and it's on a yearly basis. It just dropped in 2020. Let's see a closer picture here. All right, so we did the earnings, their income statement. Let's go to a quarterly view. Okay, so on a quarterly view, their profit margin has been improving, but boy, if we go to a year ago, Q3 20, revenue of 148,000, a net income at a loss of 92.4 million, profit margin negative 62,454, still lost 107 million on Q4 20, Q1 21 they lost 113 million, and Q2 21 they had a net income positive of 759 million and a profit margin of 84%. Let's see. How are they doing on their cash flow? Q3 20, they were losing their cash flow. All right. So it looks like they're, just a real quick overview here. They are improving as a company. After hours, they're down 9%. They're down under $100 to $93. Let's see here. All right, let's just looking for some news. that we can look into. All right. Did it just fall further? No, it's still sitting at 9% on TradingView. Says they're down 9.01%. So for Crispr, I can only find this one bit of news here for Crispr, and it came out after hours, about 4:30. All right, load. Crispr Therapeutics shares fall after updated results from early stage CTX110 cancer study. So they announced, let's see, 2 patients in the phase 1 trial experienced grade 3 or higher infections, with 1 patient having HHV6 and another developing pneumonial sepsis that resolved in 4 days. Study showed a 58% overall response rate, ORR, and 38% complete response, CR rate, in large B-cell lymphoma, with a single dose of CTX110 at dose level 2 and above on an intent to treat basis. Durable responses, LBCL, was achieved with 6-month CR rate of 21% and longest before ongoing 18 months. Based on the results, the company plans to expand into potentially registrational trial in the first quarter 2022. In parallel, the company continues to advance the rest of its immune oncology portfolio and scale its manufacturing capabilities in its new state-of-the-art manufacturing facility in Massachusetts. So it must have spent some money to build that factory. Oh, so this is what's sinking it in after hours. I don't see any other news on it. Wall Street has a bullish rating on Crispr. Right now, the grade value is a B, and this is a typical A, B, C, D, F scale. Value is B, growth is B+, profitability is A+, momentum is C-, and revisions, so that's whenever they say we need to revise our earnings up or down, is a B+. So the company looks like it's in pretty good shape. This could be just a short-term, oh man, they missed on this one aspect, one study that they were doing. It looks like they are a solid bet on sickle cell disease approval. Let's see what else. Yeah, that's it. You make a good point. Yeah, Cathie Wood is definitely buys a lot of Crispr. That I don't know if you get her email every evening, but I see. Um, oh, what was I saying? I see Crispr in that email every evening quite frequently. And you're correct. It's very hard to quantify whether this result here is enough to cause the stock to sell off. And what does that mean? I mean, we as average people, just investors, we're not experts in this field. So we kind of have to take the advice of experts. And I'm sure, Cathie Wood doesn't buy a stock unless her team has looked at it, I would imagine. I don't know how she works exactly, but I can't imagine her not working that way, and she does buy it. There's this report that I found. CRISPR Therapeutics clinical programs are progressing nicely, showing excellent safety and efficiency, validating the prospects of its novel technology as a disruptive force in the biotech industry. Directionally, we see CRISPR focusing on next generation CART and regenerative therapies for diseases with robust prevalence, increasing the chances of commercial success. CRISPR's partnerships provided it with the cash it needs to continue developing its promising technology without the need to issue more shares or forego significant revenue potential on patent assets. This is a investment thesis that I found. Let's see if they say anything in here important that could help us understand the company better. See, I don't know what a CART program is for clinical trials, but it's mentioned in here a lot. I'm looking for any forecasts in here. Let's see here. So this CTX, oh, this is 110. I found a CTX 001. So in April 21, CRISPR amended its partnership with Vortex, securing $900 million in research revenue in return for a 60% share of the CTX 001 profits. Huh. CRISPR clinical trials are showing promising results, validating the potential of the technology as a disruptive force in the gene editing space. CRISPR's anticipated clinical updates create a catalyst that we expect to positively affect the company's ticker. The company's partnership provided it with enough cash to sustain its operation without raising dilutive capital. More importantly, CRISPR didn't forego significant revenue potential or patent assets. For those reasons, We believe that the risk-reward potential for Crispr is favorable, opening an opportunity for above-average returns. Okay. So I guess we'll just have to follow it and see how it's doing. It kind of fell and hit this $93, $92. It's going a little closer. All right. So it did sell off on this news, but what does that mean exactly in the world of science and gene editing? I mean, it did have this nice bounce right here on October 8th. Really nice bounce. And if this is the falling wedge, then it could be a kicker, as it, if this top is validated on it. And I'll show you a good example of this falling wedge. Who was it I was looking at yesterday? I think it was ChargePoint, actually. Yeah. So on ChargePoint, they have this same exact pattern right here, this falling wedge. So there's a rally that goes into this falling wedge, and I posted this last night, and today is when they broke out of this falling wedge, and that's typically the pattern that you see. So this looks very similar to Crispr's actual chart. It made that turnaround on the 8th. Here, ChargePoint made a turnaround on the 6th, and they didn't have a big sell-off in after hours, but they had, what was this pullback here? I mean, that was a 3.5% pullback before going back up. But a falling wedge pattern, that's what happens, is as it's making lower lows and lower highs, it's almost like a symmetrical triangle or other patterns similar to that. But the buying pressure, it's like you take a soda can and you crush it. Eventually, that soda can will burst and explode. And that's what happens at the bottom of these falling wedge patterns. It's the only way that the stock can go. Of course, it could go down, but more than likely it goes up in these patterns. So if I go back to Crispr and look at least at a technical standpoint, so on a technical standpoint, it looks similar. It's falling down here. It made a return. It's possible it could go a little lower in this wedge pattern here. I don't know. I guess it's something to watch. It would be. This is a company that you've got to have a lot of conviction in, and I would say a basic understanding of what they're doing, which is really hard because it seems like you're doing some pretty technical stuff. But yeah, that's Crispr right now. Like you said, I agree 100%. It's hard to qualify what this announcement was. How does that affect what they're doing? How does it affect them as a company? Is this going to be a big miss on potential future earnings? But it doesn't sound like it sets them back. It's kind of like it just sounds like it was a study. It didn't go the way they wanted it to, so investors overreacted. That's a I think a highly possibility, a very high possibility, excuse me, of what could have happened here with Crispr. But at least this 9% pullback here, it's not at least breaking down out of this falling wedge pattern, which if I scroll out a little bit further, you can see that on charge point in Crispr, I mean, they're almost identical. There's this rally that goes up and then it falls down into this wedge pattern. Yeah, that $92 price, yeah, that's pretty good. Learn, invest in things. You don't. Yes, that is very true. Very, very true. There you go. That way everybody can see it. Yeah, it's always important as an investor to kind of know what you're getting into a little bit. You don't have to know, everything, especially when we're talking about gene editing and splicing type of stocks here. We're obviously not going to be the experts on it, but if you can at least maybe, read from some experts what they think is happening, you know, I always approach things as the more knowledge that I can have, the better off. I believe strongly in the whole phrase, power or knowledge is power. I say that almost every day to my kids, that knowledge is power, and they always laugh, but they'll understand one day. Yeah. All right. Well, any other questions? Anything else you want to talk about? We can. Otherwise, I'll probably head out for now until tomorrow. Again, I am working on a charge point video to post, and check out the SoFi video that I posted yesterday. As far as after hours news, it looks like Verizon took a hit. AT&T, they dropped after Barclays issued a pessimistic report on AT&T and Verizon. Start time. That's a good question. I'm trying to figure out. Last week I did the videos all at 4 o'clock, but there was only a day or two where there was somebody asking questions, and I want to pick a time where it's best for the viewer, because the biggest thing that I want to get out of this is answering your questions. What would be a good start time for you? How about that? So I'm pretty flexible on a start time. Yeah, I could do that. I can schedule them. But in order to communicate and having a conversation like we're doing now, what would be the best time for you to watch at? That's what I'm wondering. I'm curious, when would be the best time for 3:30? That early? Um, yeah, 3:30. I don't know if I could do that early at 3:30. Um, Yeah, that's a great point. It's a great point. Okay. Yeah, I'll try to stick to that 431 because I like to do it after the market's closed and after the market's been has settled for the day, so we can talk about what happened and look at charts, and that way things aren't, moving and bouncing all over the place. But yeah, I'll try to tomorrow. I'll schedule it for 4:30. That way the notification will go out earlier, and that way you can know when to turn in. So I'll schedule it for 4:30 tomorrow, and I'll put a hard go time for that for tomorrow's video. I'll definitely do that. Tomorrow's video, we're going to be talking a lot about inflation because of the CPI. I really don't think it's going to go down. I don't think it's even going to flatten out. It could slow down. Maybe it won't go up as quickly as it has over the past 2 months, but I don't think it's going to go down quite yet. Call it for today, and I will do this at a hard 4:30 tomorrow. And yes, fingers crossed for tomorrow for the CPI. I hope it does show that inflation is slowing down. We can only keep our fingers crossed that it does. Obviously, we've got no control over it. Thank you again for watching. I greatly appreciate it, and I love the communication, the conversations, and the questions. That's the best part of doing this. So thank you very much. I appreciate your time, and I will see you tomorrow at 4:30, and I will make sure to get that scheduled so we are here at 4:30 tomorrow. So thank you very much for watching, and I will see you